Business Person of the Year in 2024, according to Emerging Value Insights (EVI), is the Governor of the Central Bank or Reserve Bank Chairman, a role that has been played out with such expansive influence and impact to our everyday lives. In our deep dive today, we explain why. Hello and welcome to another episode of Global Business Insights, where we bring perspectives and analysis diving deeper into the headlines. First, some of the main headlines moving business markets. In the UK, retail sales data, that's a key measure of consumer spending, rose by 0.2% in the month. That's slower than estimates of 0.5%, but better than the 0.7% decline that we saw in October. Year on year, there was a moderate pace of increase of 0.5% against expectations of 0.8% and the previous print of 2%, which was downwardly revised from 2.4%. The report showed that demand for clothing remained weak, while sales were higher at other non-food stores. Yesterday, the Bank of England voted 6-3 to leave its benchmark interest rates on hold at 4.75%. The US economy notched a strong finish ahead of heightened political uncertainty in 2025 as its gross domestic product expanded at an annual rate of 3.1% in the third quarter. This was in its final estimate yesterday, which was above the market expectation and previous estimate of 2.8%. Also in the US, weekly data showed that there were 220,000 initial jobless claims in the week ending December 14. This followed the previous week's print of 242,000 and was better than market expectation of 230,000. The major stock indexes in the US tried yesterday to regain the ground lost after the Fed's rate cut announcement. The Dow barely snapped a 10-day losing streak. It was up 0.04% at close, but both Nasdaq and S&P indexes still were lower. US President-elect Donald Trump has repeated that the European Union must purchase more US oil and gas to make up for its trade deficit or face tariffs. And we continue to get mixed reactions as Nigerians digest the 2025 budget, which shows President Tinubu and Vice President Shettima planning to spend 8.74 billion naira on local and international trips. After extensive reflection on impact on our societies, the award for the Business Person of the Year goes to central bank governors all over the world. This role has consistently stood out in 2024 in its ever-expanding influence, capacity, and relevance. In 2024, we saw the role administered with rugged determination, resilience, independence, competence, and commitment to its traditional goals of maximum employment and stable prices. Jerome Powell, for example, made it clear to journalists, and rightly so, that even if Trump did not want him, he would not vacate the office if asked to do so. Tamed by a rare power show from a role that normally thrives best in the quiet background, Trump backs off. Arguably, it was high prices and inflation that made nonsense of the ideological high ground of the likes of Rishi Sunak, Macron, German Chancellor Scholz, and Biden. But the scepters of Bailey, Lagarde, Powell, or Kenyago are undisturbed. The governors or Reserve Bank chairpersons are not at all infallible, and some may end not so well. But despite the occasional blip, the robustness of the institution accords it a concrete-like credibility. After cutting by 25 basis points, Powell in his last meeting of the year signaled fewer rate cuts in the future, adding that the best they can do is to cautiously get inflation back to their target. Also, the majority of Bank of England officials voted for leaving interest rates steady as price pressures accelerated in the past 2 months amid strong wage growth. Since the MPC's previous meeting, 12-month CPI has increased to 2.6% in the UK. That was in November, from 1.7% in September. Bank of England Governor Andrew Bailey told Britons they have to endure expensive mortgages for longer than expected. King Charles will quietly be at Sandringham this Christmas, hoping this ill wind blows away quickly. Like in the UK, the Bank of Japan on Thursday also held its benchmark interest rate steady at 0.25%. Lagarde at the ECB ends this year cutting rates more zealously to help a very weak economy, but will soon be forced to reckon with a return of increasing inflation. In Nigeria, Cardoso must wait until inflation begins to recede before he can seize a brutal tightening, which seems to have little effect on the inflation. A key aspect of what central bank chiefs do is to locate the neutral rate. This is the policy rate required to keep demand rising in line with supply in the medium run. If the policy rate is tight or restrictive, that is, if it is above the neutral rate, or if loose, that is below the neutral rate, then of course it must make adjustments as it answers a key question: is policy suppressing or stimulating spending? And by how much, and how do you adjust given all the macroeconomic factors? And how they always get it wrong sometimes, simply admitting that there are too many complex factors at play. Indeed, having the right words to explain away their gaffes is another skill well displayed after so much practice at their press conferences. They win the Business Person of the Year, in my view, unchallenged, as we all hold on to their last word as curtains are drawn on 2024, and their forecasts for 2025 already look clouded with many caveats and uncertainties. Analysts are still digesting Nigeria's President Tinubu's 2025 budget of restoration. Budgets at their best are statements of excellent intentions to support a vision, and important considerations in appraising a budget include finding answers to questions like: are resources adequate? Have resources been properly harvested from all sources? How are deficits funded? And is there fiscal discipline to spend only according to the purse? Is spending enough to grow the economy? Are resources judiciously spent on the most important priorities? Is there too much debt? And can interest rate risk cause issues? How much is left after service of debts? How much of the spend is wasted on a bloated democracy, and how much on productive assets? Are assumptions realistic or simply juggled to produce the desired answers? What percentage of the budget gets executed, and how much wishful thinking is baked in? Are contingencies adequately factored in, and have budget items been padded with too much fat? Indeed, many questions. My summary is that the cake being shared has to be much bigger. Beyond taxation, there is need for out-of-the-box thinking to expand funding, including monetizing idle assets, privatizing less productive ventures. Also, frugality and discipline in governance, while according more priority to people-related aspects of the budget, such as health, education, skills, welfare, will all help, I believe, to deliver better outcomes. Senior business analyst Lekon Shote comments on Nigeria's 2025 budget of restoration, which has themes that we must admit strikes many positive chords.
President Bola Tinubu recently presented the 49.7 trillion 2025 budget proposals to Nigeria's National Assembly. Some have dubbed the budget the Big Whopper because it is nearly double the 27.5 trillion 2024 budget. President Tinubu boasted that his budget proposal should significantly reduce headline inflation to 15% in the new year, and also thank the foreign exchange rate to 1,500 naira to the US dollar. He can achieve this if he can raise petroleum product and exportation. and can also achieve the reduction of importation of strategic consumer goods like petroleum products and foodstuffs. But this will depend on his ability to reduce oil bunkering, supply petroleum to the local refineries, and secure the farms. While skeptics have no faith in his government's capacity to achieve these goals, we must have to simply cross our fingers. Some are concerned that the 15.81 trillion naira debt servicing provided in the budget is about 30% of the entire budget. They are even more concerned with the realization that the 15.81 trillion naira is more than the 13.08 trillion naira budgeted for the four key sectors of the economy, which are defense, education, healthcare, and infrastructure. This reminds one of a senator who recently wondered why Nigeria is still taking loans, whereas the government claims its revenue is rising and it has saved a lot of money from removal of subsidy from electricity and petrol. Well, the Minister of Finance and the Minister of Budget and National Planning need to clarify this obvious gap in the country's public finance architecture. Something else is even more critical. If you divide the 49.7 trillion budget by the 1,500 naira conversion rate proposed by the president, what you get is a paltry $33.13 billion budget. If you do further math, by dividing the $33.13 billion by the estimated 238 million population of Nigeria, you will get a mere $139.07 per capita budget expense on each Nigerian in 2025. If you take another step further, to deduct the 30% earmarked for debt servicing, the federal government will be spending $97.36, or roughly 146,000 naira on each Nigerian in the new year. This abysmal statistics needs no further comments. What we can always do is to ask this government to emulate Boxer, the workhorse in George Orwell's Animal Farm, to work harder.
Asian shares hit new lows as investors awaited key U.S. inflation data, also as the dollar towered at two-year peaks. Just in, the core personal consumption expenditure price index, which excludes volatile food and energy prices, rose 2.8% in November, matching October's reading, but below expectation of 2.9%. The core PCE price index rose 0.1% on a monthly basis. In the December summary of economic projections, Fed officials estimated headline PCE inflation ending the year at 2.4% and core PCE at 2.8% year over year. Well, that's all that we have on today's episode for Global Business Insights. Thank you so very much for following us all through the year. Global Business Insights will be on a short holiday break to be back in the new year. Thanks for sharing and for your comments. And again, thank you so very much for watching. Have a Merry Christmas. This is Bode or Shosami. Bye-bye.